So those who don't know me, I'm Melanie. I am the CEO here at the ACA, and absolutely delighted to have you on board today. We have Carla and Sim joining us, who are senior business leaders at Management for Design. And I'm sure you're aware that Management for Design is one of the key sponsors that we have here at the ACA. I'm absolutely delighted to have them on board and excited to have them with us today. Management Design focus primarily on finance and business management solutions for practices such as yourselves, architects, designers, engineers, etc. And as I said, really happy to have both Sim and Carla with us today. The topic of today's webinar, and there will be many more to come in the future, is finance fundamentals. So I'm going to hand you over to Carla. They're both going to run through the presentation, and then we really hope that we'll have an opportunity for questions and answers at the end of the session. And then there'll be follow-ups from both Carla and Sim post to the webinar. So I'll hand over to you, Carla, now. Thank you.
Thank you for the introduction, Melanie, and the opportunity to provide business support advice to your members today. Welcome, everyone, and thank you for taking the time to attend our Introduction into Finance Fundamental webinar. We'll keep this at a high level as we have about 20 minutes. However, we're very happy to take questions, as Melanie said, so please pop them into the Q&A section and hopefully we'll get to them at the end. We are navigating our way through unprecedented times. We don't have the opportunity of drawing on our previous experience. There has never been more uncertainty. The current crisis has completely disrupted the flow of cash between business to business and between our clients and businesses. The project-based nature of our industry just means that we're more vulnerable to disruptions, which results in increasing pressure on our cash flow and our business financial well-being. Therefore, it's even more imperative that business leaders understand where their business sits financially. The key thing out of today is to introduce our business to you and the finance fundamentals that should be in place to establish, build and sustain your firm. By the end of this webinar, we'll have covered these objectives, understanding the key finance fundamentals and the impact of these fundamentals. Knowing where your business stands financially is fundamental to the effective decision making. You need to ask yourself, where are your numbers today? Where will they be in the future? And where do you want them to be? How do you drive your business to succeed and deliver the outcomes that you're seeking? Accessing accurate and timely information is not always easy. There's your income, your expenses, your profit margin, your cash position, project performance, the list goes on. And once you have this information, you then need to interpret and understand it. Often it's the business leaders who will set the financial structure in place and champion them. But it's up to everyone in the business to understand what they are, why they're there, and the impact each person has on them. If you're a leader, it's your role to regularly absorb this information and to make decisions promptly. These executive decisions can then be converted into activities to be completed by your team. The fundamental of financial controls revolve around the elements as seen on the screen. Some of the questions derived from these elements are, do you know the difference between profit and cash? What is your bank balance and do you have a safety bank limit? Can you interpret your income statement and balance sheet? What is your profit margin? Do you have a target? Do you set a budget annually and review it monthly and analyze against actuals? Do you set performance measures that align with your strategic plan? And do you share your financial information with all the key people in the business? So let's break down these questions. First things first, profit and cash are different. Profit is the practice's earnings, which is revenue minus the expenses. Profit is simply put, a theory, because you can't spend it. Whereas cash, on the other hand, is the money in your bank account. This is real and can be spent. Each business transaction will affect the profit and the cash in different ways and at different times. For example, paying salaries, paying taxes, purchasing of computers and equipment, waiting on debtors to make a payment, or the creditors that haven't yet been paid, all affect the profit and the cash position differently. Most of the time, the effect on the cash position can be delayed and occurs after the change in your profit position. For example, say the fees for March are £100,000. Right now, you are unlikely to have received any of the £100,000 in the same month that you've reported in your profit and loss statement. On the flip side, those salary and wages incurred to produce the £100,000 worth of fees, let's say this equates to £50,000, would have already been paid by now and should have reduced your bank balance accordingly. Both profit and cash are important to your business and need to be reviewed every month as a minimum. The amount of money needed in the bank account will often depend on the risk profile and the life stages of a practice. Most startups routinely have to add additional funds, whereas established businesses may retain years' worth of unpaid profits in case of a rainy day. Or if they're in expansion mode, the business could even be tapping into an overdraft facility. As a benchmark, a practice should aim for 1 to 3 months worth of average monthly expenses in the bank as their safety bank balance. Anything less than a month's worth of expenses, unless there is an overdraft facility, could mean that the cash flow is distracting the practice leaders, creating unnecessary concern and pressure. Right now, in the COVID-19 environment, most practices will be happy with 4 to 6 weeks worth of expenses in the bank. An income statement or profit and loss statement are fundamental to understanding and assessing the performance of your practice. This keeps track of the income, also known as fees, and the expenses, which are the costs that your practice incurs to generate those fees. The difference between these two is the profit, provided that the fees are more than the costs, otherwise this is a loss. Just being aware of this simple calculation can help every team member to better benefit the practice. The numbers are always a reflection of the decisions that were made or not made and the resulting activity during the month. So doesn't it stand to reason that if you want to change the numbers, we simply need to change the activity that caused the numbers? A balance sheet is simply a measure of what the practice owns and what the practice owes at a specific moment in time. It helps the business stakeholders and analysts evaluate the overall financial position of a company and its ability to pay for its operating needs. You can also use the balance sheet to determine how to meet your financial obligations and the best way to use credit to finance your operations. Both reports are necessary and should be reviewed monthly. Month in, month out, the practice leaders need to know where the business stands financially to enable them to steer them in the right direction. Profit divided by fees is referred to as the profit margin, and a well-run practice will have a profit margin of about 20%. In professional services, a significant proportion of the expenses are the salaries. And if they're less than 50% of the total fees, then a profit margin of 20% should be achievable. A profit margin between 10 and 20% is acceptable. However, this doesn't leave much room for those low-fee months. A profit margin above 30% may mean the practice is an expert in its niche market and can command significant fees. Or maybe just that your people are overworked and under-rewarded. The key thing about profit is not so much a means to an end, but what it allows you to do with the business. A strong profit allows you the ability to take on the work you want to take on, work with the clients you want to work with, say no to the projects and the clients. It allows you to attract, reward, and remunerate the best people and to invest in marketing, technology, growth, and training.
Thank you, Carla. So now let's look at budgets and forecasting. A budget sets the tone for the year ahead and encapsulates the strategy for the practice in numbers. So in setting a budget, a practice is putting a benchmark. in place of the expected work. Budgets should be set annually, typically at the start of the financial year, and reviewed monthly. It is essential for forward forecasting and where you think your practice will be in 12 months' time. Some of the consideration when setting budgets should be work generated. What are your future fees? Work in hand. This is the fees that you've not yet billed. Number of people. So what is your full-time equivalent staff? Cost of people. These are your technical salaries. Cost of overheads. So these include items such as rent, rates, IT expenses such as printing, software, professional services, and so on. And the current opportunity. This is what you've got in your pipeline and the percentage likelihood of conversion. Even if you're not a business leader, it is still important to understand the effect that you have on budgets. So now let's look at forecasting, which needs to be a frequent discipline. So forecasting or reforecasting or forward forecasting, budget update, rebudgeting. There are many terms used, but simply put, a forecast is derived from reviewing the budgets monthly and having a clear understanding of where the practice is now and where is it heading. This is very important right now. This should be updated as new information arises. Rather than alter the budget, we capture this in a forecast. So let's look at budget variances. A budget to actual variance analysis is a process by which a company's budget is compared to actual results, and the reason for the variance should be interpreted. Typical budget variances are usually caused by change in revenue, like the fees going up or down, or not managing expenses accordingly, which can sometimes be due to inaccurate assumption or poor budgeting. This could mean results are measured against unreasonable baselines. Variances between actual and budgeted numbers should be investigated and explained monthly. Obviously, unfavorable variances should be avoided where possible, as these can negatively impact the performance of the practice, and corrective actions are required to ensure the impact is as minimum as possible. We do recommend that businesses have project reporting in place. So ask yourself, how do you manage projects across the studio and each of these projects? It is important to track fees and costs by project to ensure that the projects can be completed within their set budgets and stay profitable. The culmination of profit of each project makes up the overall financial performance of the practice. Only when the businesses establish what the profitability of each of the practice's projects are, can it make more accurate decisions about resourcing and fees. Then we need to look at resource management. What is resource management? Simply put, this is who's working on what and when, who is available, who is over and underutilized, what are the resource requirements moving forward. It should tie into billings now and into the future, and it should be reviewed regularly. In our experiences, we often find practices do not have an effective system that they adhere to managing resources across the studio. As a business, you should have a clear picture of the workload moving forward. An effective and comprehensive resource plan ensures you have the right number of people to complete the work, but it also means that you have the right people to help grow your firm. It is essential to share financial information with your leadership team. Whilst every business is different, it is important to give your leaders the information they require to excel in their role. This means different things to different practices. Some will share all financial information and others will share limited information. Leaders will share what they feel comfortable with, whilst ensuring the necessary information is made available to the team to drive the practice forward and ensure good decision making. There is also an opportunity for the business to mentor its leaders and support them to make informed business decisions. The business leaders need to show the way. They need to develop and expect a culture of business accountability, management, performance, profitability, and systems. By having all these systems and project plans in place, it will lead the ability to analyze a whole myriad of data, which can show what impact it has in your business. Ask yourself, have you set targets that align with your strategic plan? By analyzing the data, you can select relevant metrics to help define business success. We recommend that you set and review meaningful performance indicators every month. What gets measured can be managed and grow exponentially. Some KPIs you may want to consider include profit margin, debtor days, fees per person, cost per person, work generation, and staff utilization. Now that you have all this data and information, which is irrelevant unless you review it and take action, most leaders generally have enough to do between generating new work, designing, and ensuring existing projects are on track. Therefore, we recommend that businesses put an expert in charge of their financials, be that working with an external accountant on a monthly basis, hiring a specialist service partner, or a head of finance internally. A key action you need to take is to have regular monthly meeting. You should have someone in the meeting who can interpret the information, someone who understands financials. This element is very important as most of your business decisions will be driven from your financial performance. If you are a director or a business leader, having a solid understanding of your financial position and performance will give you a peace of mind. You'll be better placed to help the practice and have confidence to focus on the aspects of your work that you're best at. All architects need to understand how finances affect the business, with a level of understanding depending on the level which you're at. For example, if you're a graduate architect, simply understanding how getting your timesheet in on time can lead to effective decision making. If you're a senior architect, understanding what the current profitability of your projects are and how can you improve or maintain it. An associate should be across multiple projects, including the fees, the hours of tracking, and the profitability, along with any scope query. Architecture is a business, and most architects can make the more architects can make a connection between the design process and the numbers, the better place you'll be to help the practice, so that the business can take on larger and more ambitious projects. So what's next? We've provided you with a lot of information, so don't file this away in your brain. Make sure that you are holding yourself accountable to enact positive changes in a way you manage your business and succeed in the future. We understand that if you don't currently have a system and processes in place, making a start can often be the hardest part. So let me ask you, from listening to this presentation, what's going to make the greatest impact on your firm's financial standing? Think about the one thing you will do differently and take a direct result, and make sure you take action. A way to hold yourself accountable is to share this. So send me an email and let me know the one action you will take as a direct result of attending today's webinar. And for the first 10 webinar attendees that reach out, we'll provide you with a complimentary review of your numbers to get you moving in the right direction. So please email me on estherandayson@managementfordesign.com and take the first step. I look forward to seeing your various actions. Please also find on screen different areas that Management for Design can help support your business. If any of these are of interest, please let us know. Thank you for taking time to attend the webinar today. We hope you found this useful.
And it's a thank you from me as well. On screen, you'll see our contact details. I'm split between Melbourne and London, and Sim is always in London. We will forward the webinar presentation to you in the next few days and reach out to you on a one-on-one basis. In the meantime, we'd love to hear from you if you have any questions, so do feel free to reach out and pop them in the Q&A section. Back to you, Melanie.
Yeah, well, thank you very much both. I'm certainly going to read through that presentation in more detail after this, because that was very insightful. Thank you. I'm going to kick off the Q&A session, if that's all right, if other participants want to follow. But in terms of, you've gone through a number of finance fundamentals for a business. Are there specific ones that you would recommend practices or smaller organisations actually focus on in the first place? Or is it literally everything that you've covered off in a presentation? Or should somebody be going, right, I should be focusing, for instance, on budgeting and forecasting in the first instance, and then X, Y, and Z?
Yeah. Sim, me?
Yeah. That's a good question, Melanie. So I guess it depends on the stage in which the firm is in. It basically depends on the size of, there's lots of factors that play into it, but I would say in a generalistic answer, the current environment, cash is king. So I would say the firm needs to ensure that the cash management is the first thing that they focus on, and I think with that need to ensure that the budgets and the forecasts that tie into the cash flow forecast are also complete. So I would say those two are the two key elements. So we need to make sure that you're managing your cash properly, and then once you're and that you have an understanding of how you're spending your cash, you need to then be able to forward forecast, as Carla mentioned, at least 4 to 6 weeks.
Okay, thank you. I think we've got one question.
Finance project management software for small practices.
Yeah, from Patrick.
Yeah, so he's asked, do you recommend any finance project management software for small practices? There are a plethora of them out there. One of them could be, I think I saw you at the Cubic webinar. So there's Rapport 3, which is a good one for small. There is Xero, which is an accounting software. And then you can also link that with Workflow Max as another sort of add-on for your project and resource management. There is also for smaller, I'd probably say Xero and Workflow Match are probably better for your smaller firms. But again, it does depend on how small the firm is to how large it is. Larger firms are probably looking at something like BQE Core or Deltec Vision. So those are the sort of 2 or 3 or 4 areas that I'll be looking at.
Would be good to know what you currently have as well, and how you're doing.
What are you currently using? Yeah.
We have a comment on chat that iTask X Pro is helpful. Have you guys heard of that? Sorry for my ignorance, but that's come through from I believe it's Russell. Have you heard of that software?
iTask X Pro, no, that's not something.
Project management with costs and utilization.
Yeah, I mean, as I said, there is a plethora out there. There's quite a lot that you can use. We do have an online question or system selector that allows you to answer a bunch of questions, and at the end of it, it will spit out various different systems that will match your requirements. So we'll be happy to send that around to the webinar attendees as well at the end.
Okay.
I think we'll probably have one more question, time for one more question before we have to wrap up.
Okay.
Yeah.
Any more? I guess, one more question. Oh, thank you.
Take more time, yes. So focus on the business, not in the business is, the note there was a sharp reminder that I need to take more time to
manage the numbers we have.
So yeah.
That's great. Thank you. Sorry, carry on, Carla. I apologise.
I was going to say we recommend that business leaders spend about a day to half a day a week on their business, and that means on the business rather than in the business. Yeah.
So on the finances rather than under the business
on
itself.
The finances, on the strategy, on the systems that you have in place. Those are the things that you should be focusing on rather than in, because we know how hard it is, how easy it is to get into the projects and all that.
In terms of the operation side of it. Okay.
Yeah.
Great.
Okay. Patrick says thank you. So very helpful. Okay, are there any questions from anybody else, or Carla and Sim, is there anything else you want to add? Or
I mean, the only thing I'd like to add, this is obviously an overview, a top line overview of the key fundamentals. If you have any questions on any of the subjects that we've covered, please do feel free to reach out. We're more than happy to discuss in more detail about your actual business.
Absolutely, in a more one-on-one environment. And
yeah, absolutely.
As Sim and Carla said, everything will be sent through to you all later on in the next week, and also a recording of today's session, and then they can follow up with you on a one-to-one basis in terms of any specific needs or questions, queries you have.
Okay. Perfect. Thank you very much, Melanie.
Thank you, everyone.
Thank you very much indeed for joining. Thank you very much.